It is Tuesday, January 23rd. We are going to do our review on the market. We're going to look at some upcoming or recent news events that have occurred. We're going to take a look at some trades that we're in, some potential trade setups, and reflections. So, first thing I want to talk through is natural gas. We see natural gas has actually entered oversold territory. We saw a gap up in price to over $3.10 that has now dropped back down to around $2.30 to $2.40. Back at pre-pandemic levels. So this is looking like a buy opportunity. I've actually gone in on a position that we'll talk through. In terms of other um, events and things to look at. So I like to take a look here at Jim Wyckoff's charts that he typically sends out on the precious metals. And in terms of his current positions or what he's kind of looking at as opportunities, he sees gold as bullish, which I would agree with. Silver looking a little bit more bearish, which we'll talk through. I also agree with that sentiment, but we're in on a position long. Platinum has had a lot of downward momentum, but it does look like it's starting to bottom out. And palladium, also very similar, where it is on a very significant downtrend, but starting to bottom out. Other news items we'll quickly look at. Bank of Japan is keeping negative interest rates unchanged, and China is talking through a market rescue package backed by $278 billion. So this is going to be really interesting. I can actually see a flight to commodities like gold and silver, given the news here in China having such a large economy, how this can really impact the rest of the markets, especially the precious metals. And then the last thing to look at is the FedWatch tool. So if we look at March, because it's pretty much a wash here that January is going to be remaining interest rates at the same rate that they're at, 525 to 550 basis points. But when we look at March, there's about a 40% probability that rates are going to go down that quarter percent. And then we're really looking at May as probably that first interest rate cut. So market currently has priced in 5 to 6 interest rate cuts, which is a little bit aggressive. The Fed did come out with their dot plot back in December. They had stated that they were going to do roughly 3 interest rate cuts this year. So we're going to have to see how that plays out when the first rate cut actually occurs. But let's go ahead and look at the charts and look at the potential trade setups. So silver had a massive the where I'm bearish here. If we pull up the bigger chart on silver, we've actually broken a critical trend line here. So if we go to the call it the 90-day chart here, we were looking at kind of a wedge pattern that was forming here where it broke to the downside. It has bottomed out or seemingly bottomed out right above $22 and is starting to revert to the mean here back to 2270. So I would like to see a close above 2270 or even above 2290, this Fibonacci retracement, for us to really be in the clear here going long. We're going to have to see how that plays out. I'm not super, bullish on this trade right now. We're in on one long position, but there is a significant risk to reward here. A lot of upside, very little downside. So we're going to stay in on the position. If we look at gold, we have a very interesting wedge pattern that's forming here between, call it 2010 upwards to 2043, that we've been in this kind of consolidated range. So I'm expecting to see gold really break out to the upside here, especially as, again, we're shifting to this interest rate cut cycle. We're looking at, the Chinese market having some struggles and issues that can cause gold or a flight to safe haven assets like gold. We're going to have to see how this plays out. But I do like the pattern that's forming here, this kind of wedge pattern right around 2040 down to 2010. We will add to this position if it dips down on the lower end, and I expect a potential breakout here soon. It's all probabilities, right? We're in at 2015. I like that position. We'll get in a little lower if we can, but all probabilities, right? We're not going to be right every single time. We do the best we can with our odds or with the odds. And actually, today is very interesting because we can see the dollar is up 0.4%. And despite that, gold is trading higher and silver's up 1%. So normally there's an inverse. So gold should be trading down 0.4% and it's actually trading up. So there's a lot of buying momentum right now in gold, despite the US dollar having some significant strength here. And I'm actually really surprised at this, that we're breaking past this Fibonacci retracement. We're going to have to see if we're going to be able to go to this newer level, the 105, or if we're going to find some solid support here at the current levels. Platinum, we're in on at 885, so we're in on the green pretty well here. And we're finding some key resistance around this 913 Fibonacci retracement. We have broken above it, and we are having some good upside momentum. So I do like where this is going. We can see that there's kind of a pretty clear bottom out and now some upward momentum. So, um, we're finding a bottom right around 900, and it keeps bouncing off of that, but it's in this consolidated range. So we'll have to see where Platinum goes. I'm very bullish on Platinum. I think this has a lot of way to go up. We're going to skip over copper and the S&P and look at palladium. Palladium I also really like here as well. We're starting to get some really good price action to the upside here, very similar to platinum where we've gone into this downtrend. We had this kind of bullish uptick here. I'm drawing a blank on the name here, where we have one giant red bar and then two confirming green candles that are going back to the upside. It's possibly a bullish engulfing is what we can call this, and then we're breaking or starting to break out of this 925 Fibonacci level here, and some really good price action that took us back to this previous chopping area around 965. So really good again, price action on the upside here. We're in on a long position on palladium. Crude oil, there's been again this range that has been broken out of, which I like and shows a lot of bullish momentum for oil. So the fact that we broke above and closed above 72, 73, and now $74 per barrel on light sweet crude is a very good bullish momentum indicator. So I would like it to revert back down to 71, 70 or lower before we enter. And we are not in any positions here, but this is looking really good for the bull market. Natural gas, we did enter a position on this gap down. So as soon as it opened with a major gap down, I did jump in on a position here. We are in oversold territory when we look at the RSIs, which I don't have pulled up here. And then if we look at the open interest, which is another indicator that I've started to follow here, it's actually very low, right? So there is a lot of room for this to come back up and recover. There's not many people in positions on natural gas right now. So I can see, positions being re-added and seeing this start to recover here. And we're actually in on a future options position for natural gas, given that the timing is going to be really tough, I think, in order to get, nail the timing on this position. So the future options at least de-risk the profile a little bit where time or volatility is a lot less, we'll call it. So if the price has a major swing up or down, there's still a time component where we're not going to get stopped out and we're not going to lose a lot on a position or get stopped out immediately. Future options give us a little bit more leeway to recover over time. So as long as this can go back in the next month or so, closer to 2.5 and up, we'll be in the money and in a pretty good position here. And then take a look at some of these other charts here. So Bitcoin, the Ethereum futures, and the Nasdaq 100. I just watch these. I don't really do too much with these. But one thing I wanted to show that I mentioned on the last call is my risk to reward spreadsheet for entering positions and tracking positions. So let me pull that up. So this is my trading log. So I actually use this to track all of the trades that I enter. So what's the open date for the trade? We'll talk about these that we recently added, but what's the future that we're trading? Entry price, average exit price. This is highlighted because we haven't exited these positions yet. These are more price targets. How many contracts? How much do they move per $1? And then what's the profit and loss between the entry price versus the exit price? Entry notes and trade reflections. So as I talked about, we're in on palladium, we're in on gold, silver, platinum, and natural gas options. This was the cost for the options contract. It's a $2.25 contract, so the break-even price is around $2.38. So probability rank. Probability rank is on a scale of 1 to 3. Both of these are scale 1 to 3. What's the probability of this going in the direction we want it to go? So 1 is very unlikely. It's, according to me, 30 to 50% chance that it's going to go in that direction we want it to. And then 3 being this is a really good trade setup, 70 to 90% chance that this is going to move in the direction we want. This is based on my own thoughts on the market and the current prices and so on and so forth. So if we look at platinum, for instance, we have it as a 3 out of 3. High probability that it's going up off of this 885 entry. Risk to reward is, how good is the risk to reward? What are we risking on this trade in terms of 2 to 1 odds, 3 to 1, 4 to 1 or more versus the potential loss. So platinum, our risk to reward, we have, I think, a stop down at 840 with an entry price of 885, but I can see this going back up to 1030, 1050. So if we do the math, it's around a 2.5 risk to reward, or 3.5 risk to reward. So what we do is we put each one of these criteria in, and then this gets a total trade rank. So it computes 60% probability weight, 40% risk to reward weight, because I think the probability is more important than the risk to reward. But if you get a good entry, like, that obviously matters too. And that computes a total trade rank. So on a scale of 0 to 100%, how good is this trade setup? And with platinum, you can see it's 87%. We'll actually look to add another position if we get a better risk to reward ratio here. Silver, gold around 60%, palladium 77%. So this really tells me, as I reflect on trades and trades go well or trades don't go well, is my system working, right? If I'm constantly buying and entering setups that I think are, 100% or 80% trade setups and they're losing, then we might need to reevaluate our system, versus we might look at it and say, oh, the trades that we're doing that are losing are mostly the lower probability trades, or the trades with the lower total trade rank. So those are, maybe we tighten up our criteria before we enter a trade. So that's kind of how we're thinking about this. Again, these are our average exit prices that we are anticipating as price targets. We're going to monitor this closely, and then at the end of the month, we do the math. We see how many winning trades, how many were home runs, triples, doubles, singles. That's what I calculate here in the success box, and we'll talk through this as we start to, exit positions and see how things go. But we'll talk probably in the next day or two, and I will do another video report, and we'll see how things are shaping out. Thanks a lot.